Hello guys, it's Nifty Expiry and almost half session is over. It's around 11:30, 12 o'clock. So the first half of the mentoring session is also over. Now, if you ask me what are the trading opportunities, what trades I personally take as a buyer and seller also I will explain. So as a buyer, what are the trades that I take? I'll show you those trades and I will show you the orders also. So market is looking tricky, market is looking sideways, but still if you stick to your levels, you will definitely be able to make money and you will be in profit. So if you look at this, this is, yeah. So the trading opportunities are like this. It's a big gap down. So if you look at the pre-market analysis, I told you it's a sell on rise. So what I did is, this is a profit that I made. It's a capital 70,000 I used, and the profit is 31,000 already. Okay, and if you look at the beauty, the charges are just less than 1,000. It's 900. So for making this profit, you're paying very less charge, and you can see the trades are executed only by now. I have placed an order, but I'm yet to get that. Okay, but still, these are the orders. So the first trade is coming at 922, right? And you know the reason also that I'm looking for a bounce. So this is sell on rise, and this is my most important level. So this is where I'm taking my first entry. So I've told this in the mentoring session also, in live also, we have got this trade. So this is how it is actually done, right? So that's the first trade. And what you see is I have booked the profit. Yeah, around 20, 25 points is booked over there. And then you wait for another almost half an hour, right? So the objective is not to trade every single candle. The objective is to wait for your levels and take the trade. Now, what is that? This is when it comes to the day slow, right? So once it comes to day slow, and when you see some kind of bounce which is happening, so I look for a small call trade, and then I took a call trade here. You can see, so the first trade is at 922, and that is exited, and the next trade is at 1004, which is almost half an hour. That is also exited, and then comes again a put trade, which is again at 1033, almost another half an hour. That reason, if you see, you can see market gave the down move and again a bounce and then broke the day's low. So first time when it comes to 20 MA, you can expect a small reversal. So you got that, and that is the trade that you have taken. So the third trade is a put trade. That too, like 1.5 hour, just 3 trades. And then I got some puts here, small quantities, and I've exited this. So this put is taken again once it came to the same level. So this is the level where you took that initial trade. So here is where it was just passing time. It was showing some good time decay also. As a seller, I could have capitalized it much better. And in my selling account, the profit is bigger because I'll show you my selling position. So initially, I don't want to wait for a selling position. Once the market opened, I immediately sold a put because I'm considering 24,000 as a support. So that put anyway is in a very big profit once you got this bounce. And once it came here, as you see here, I'm buying a put, right? So instead of buying a put, what I will do is I will sell a call here. So I already have a put sell. I have a call sell now here. It is not a straddle. It is directional in the beginning that it will bounce from here. Now also it is directional that it is giving a dip from here. Now, what is the positioning? Once again, it came and started bouncing. Another extra put is sold. So here I have a put again. Once it came here, I am selling a call. Now, even if you're not selling extra put or extra call, initial call and put sell, that itself you can simply keep there. Even if you sold a straddle here, still you can keep there, right? So the put sell, the first, forget about the additional puts and call which I sold. The initial put sell, the initial call sell, the put I sold here, the call I sold here. Very clear level. Just look at the pre-market and you will understand my psychology. Where I would have sold, you can predict. Opening itself, I sell a put. Here, once it reached here, I'll sell a call. I'm not going to sell a straddle opening. I start with directional, then I shift to non-directional if it is required. But in fact, both are directional. Why both are directional? I'm expecting in between. Right, so the market is staying in between. So this put is giving a great profit. This call is giving a great profit. So option selling is in a huge profit as long as this, maintain like this range. And even if it is breaking out, right, on the upside or on the downside, I can simply do adjustment. And since already this much time has given from 920 to 1240, almost the premium is decayed. So I'm very happy with whatever we got. So it's perfectly fine. So this is exactly, what you need to do. And so far, if you ask me what are the opportunities, I told you option buying, you have seen 4 trades, right? One put and then a call, then a small put, then again a big put. So 4 trades we have taken, 4 are in profit. and 30,000 plus profit just by using 70,000 capital, trading small quantity, and just 900 is a charge. So option buying also you can make money, but only thing is that you can't take a random entry anywhere and you can't make money. You need to be very precise, you need to be pinpointed, and then you can make money. So if you would like to learn this, you can get in touch with us. We have the live market mentoring program. Talk to our team, join there, and you can trade with us live during the market hours. See you there. Thank you.